Let's shift focus to the big story of this morning. In a speech titled On the Importance of Independent Regulatory Institutions, the case of the Central Bank, Reserve Bank Deputy Governor Viral Acharya on Friday argued for the need to protect the independence of the central bank so that the economy is protected from short-termism, as he called it. Jahangir Aziz, head of emerging markets economic research at JP Morgan, joins us on the phone line all the way from the US. Thank you very much, Jahangir, for joining us. I know you have a flight to catch, but this public expression of disagreement between the RBI and the government, do you expect it to hurt markets?
I think the question of central bank independence, which is what the deputy governor has raised, that's something that episodically arises in Indian context. So I don't really think that is something A, new, or B, that hasn't been discussed publicly before. So I think this is part of the course of doing macroeconomics in India, I'm guessing.
Jahangir, hi, good morning, and thanks for joining in. Did you find anything different in the speech in terms of, the tone from the Y.V. Reddy or Subbarao or Chidambaram?
The rhetoric may be different in the sense that we're talking about central bank independence much more centrally today than in the past. But apart from, talking about central bank independence as a core part of monetary policy, which is, I think, the new argument that the deputy governor is bringing in the context. I mean, that has been discussed in other countries. But saying that central bank independence is core part of monetary policy, I think, over the last 10, 15 years, we've gone through, as I said, episodically questions about interference on both sides. So I don't think that, beyond that, I don't think it's that different than what had happened in the past.
Jahangir, morning. One of the points the Deputy Governor referred to is that there's a move apparently to take 3.6 lakh crore capital out of the Reserve Bank. Do you think if such a step is taken, it will be perceived badly from the world outside?
If you go back into the last couple of years, I think when Arvind Subramanian was the chief economic advisor, he raised this issue about excess capital in the Reserve Bank of India, excess when as a comparison to what other central banks have. To be fair to Arvind, I think that there isn't anything accepted globally that a central bank should have X amount or minimum amount of capital. So I'm not really sure that the reaction in the market is going to be that shocking if the central bank, if the government of India decides to take as part of its usual transfer of profits, etc., capital of which is basically past profits of the central bank to the budget. I think what is problematic is that what is it going to use it for? Is it going to use it for quote-unquote asset transfers, or is it simply create assets, or is it simply going to be used for current expenditure? I think that's where I think things become much more murky and much more problematic, is what is it that if indeed the government actually thinks about taking away capital or taking their past profits from the central bank, what is it using it for?
Okay, but you don't think that 3.6 lakh crore per se will be inflationary?
We are going back to the same issue, right? So if this is to fund a much larger fiscal deficit, again, we are all talking about hypotheticals over here. So if this is to fund a much higher fiscal deficit, let's say additional fiscal deficit of 3.6 lakhs, obviously it's going to be inflationary. But if this amount of money transfers from RBI past profits is being used to recapitalize banks, or which is what Arvind Subramanian had proposed, then there are not that problems regarding inflationary the implications of that kind of a transfer is much more questionable, that whether it's actually inflationary or not. If this is being used to replace one asset with another asset.
So, you know, the reserves of the central bank have been squirreled away for like 20 years now. Since the late 90s, we've been seeing it happen. Would it be ethical for a government in its last 3 months of power to take away, even if it's to be taken? Should it have been spread over the last many years, you think?
First of all, let's look at the issue with some degree of separation from from how we're looking at it. None of these assets are something that the RBI got quote unquote free. These were assets or these were profits that the RBI had made, and there has been a cost that has been paid for in acquiring these assets. Now the question is whether or not the government should take away or transfer part of the assets. Again, the question is what is it going to use it for? I mean, as long as this is being used to supplant one asset with another asset. As I said, I think it is you're comparing apples to apples. The problem becomes if this is being used to actually fund just very large fiscal deficits or disappointments in revenue earnings. I mean, that's when it becomes problematic.
Yeah, I get your point. Jahangir, what you're saying is that if the fiscal deficit itself expands, then it's inflationary. But if it goes as capital for banks, one reserve to another reserve, it's not all that bad. I take your point. No, my question is, is there a chance that India gets perceived as Turkey, where also the central bank was seen as being in danger?
Reserve Bank of India's, in this case, own interest rate policy, I think right now is probably much more in the forefront and much more in the minds of investors rather than much more hypothetical situations like these. I think that, how RBI pursues its interest rate policy in the coming quarters, I think that is probably more important than any of these issues at this point in time.
At a time when there are enough and more debt market issues, this is only adding to all of that. Would you change your growth expectations at all?
I think those are part of the problems or the headwinds that the Indian economy faces. I think illiquidity and what's happening to non-bank financials and the ability of non-bank financials to keep funding SMEs and keep funding consumer lending clearly is a headwind. And I think that just adds to the other headwinds that already India is facing, current account deficit, higher fiscal deficit. I think the relief that we have seen over the last few days in, more benign oil prices is probably one of the things that is holding back more virulent reaction in the market. But I think the issue of illiquidity in the non-bank financials is just adding one more, headwind to already what India is facing are, both on the current account deficit, fiscal deficit, as well as higher global interest rates. These are all.
Okay, finally, let me end where we began. Assuming, in case matters get precipitated so much that there is a parting of ways, that someone at the top quits, if it gets to that, will markets be, rattled?
I think that's always the case. Again, we are talking about hypotheticals over here, and I think that if you do have a relationship between the central bank and the government come to a point where we have strong adverse reactions, the market will react badly to it, right? I mean, I don't think that's something that is specific to India or in this case. I think that's true for almost everywhere else in the world.
I'm not even saying it is on the cards or anything. I'm just saying, one shouldn't allow matters to get precipitated. It's not as if it's on the cards at all. Thank you very much, Jahangir Aziz, for staying up for us and taking this call. We have to take a break, and we're back with the micros, the top 10 list of stocks you need to watch out for.